Awesome, loud and clear. Let's give it a few moments for some of the other panelists to hop on.
Yeah, and yep.
Oh, and in the meantime, though, as an introduction, my name is Okiki. I'm a senior associate on the crypto asset products and services team at KPMG. That's kind of within the blockchain COE. Basically, what we focus on is advising fintechs, financial services institutions, and a number of other crypto native companies as it relates to basically going to market, advisory services, cybersecurity considerations, and good stuff like that. Alrighty, I think we are waiting on Rune, is that correct? Hey, Bob. Hey, Matt. Hey, Matthew.
Hey there. How are you?
Good morning.
How's everyone feeling?
Good. How you doing?
Talk about some stablecoins.
Yeah, exactly. This is. I was chatting with Matt right before this, or sorry, Matthew, and this really is a hot topic. Like we're seeing Janet Yellen, we're seeing a number of other regulators within the U.S. basically discussing this topic. It's like my pet theory is that this is probably going to, like between stablecoins and CBDCs, it's probably going to kind of affect things like the Belt and Road, which is related to geopolitics. There's so many different kind of areas we can cover. But yeah, now that the gang is all here, we can kick it off with introductions. Again, my name is Okiki, working on the crypto asset products and services team at KPMG. Basically, we help provide advisory, cybersecurity, and risk services related to basically any fintech, any financial services company that wants to plug into crypto, and then on the flip side, any crypto native company that wants to basically make sure that their product is up to snuff for some of these institutional clients. But to introduce our panelists, Rune Christensen is the CEO and co-founder of MakerDao, one of the earliest DeFi protocols. MakerDao is most known for issuing DAI, a decentralized stablecoin with an intricate two-token system that where basically one token incentivizes the other, all focused around keeping the price of DAI stable. Next, we have Matthew Canteri. Matthew Canteri is the GM at Anchor Protocol and Terraform Labs, a team that's focusing on building low volatility assets on the Terra protocol. Previously, Matt helped found the Enterprise Ethereum Alliance and spent nearly 5 years at firms like Microsoft. Next, we have Matt Werner. Matt Werner is the Associate Director of Product on Gemini's wallet team. Before working at Gemini, he spent time engineering at Dfinity and leading Coinbase's wallet team. And last but not least, we have Bob Bench. Bob Bench is an Associate Vice President at the Boston Fed, leading the bank's efforts on CBDC research. Before working at the Boston Fed, Bob worked at Circle on legal compliance and policy matters. So pretty much we have a star-studded cast of very, very knowledgeable panelists who can basically cover all sides of the stablecoin and CBDC debate. So let's kick it off. First question, what is the current status of stablecoins in relation to the general crypto markets? And if we want to take it a step further, the general financial markets. Anyone want to kick that off?
I think it's very unknown because there's so much up in the air this week, like with Yellen talking about how she's gathered together the President's Working Group for Financial Markets to make a recommendation on what we should be doing about stablecoins. I think it's hard to say what exactly the status is for stablecoins, but I think the one thing that differentiates stablecoins at this point from the rest of the general crypto industry is that it is under a lot of regulatory scrutiny, like more so than elsewhere.
Definitely. And Rune, would you be able to speak to the almost fundamental nature that stablecoins have been taking in the last, definitely in the last year, but over the last number of years with DAI and kind of the broader DeFi markets?
Yeah, so when it comes to the role of stablecoins in DeFi, you could definitely say that they're sort of the fundamental building block that allows it to exist, because yeah, you need something stable, obviously, to be able to do sort of financial transactions that make sense. And I mean, it's not technically true, but a lot of people say, you know, consider Maker to be the first DeFi project. We were definitely one of the very early ones back before Ethereum even launched, and basically the only one that's still around today. And DAI, the DAI stablecoin, which is a decentralized cryptocurrency, right, but that retains this stability. It was built fundamentally from the beginning to be be this building block that others could build on top of, that could sort of, you know, integrate into their protocols, and so everyone can sort of specialize in their own features and their own system they want to build. And as a result, DAI became sort of the foundation of what ended up evolving into DeFi, because everyone used it to build their own products. So you got this like very convenient way to access all sorts of different financial solutions using a single currency. And since then, it's only grown further. And we've seen in the last year, we've seen like DeFi really go mainstream, and then also see the centralized stablecoins like Tether and USDC begin to play a really fundamental role. And ultimately, I think that nowadays, the centralized stablecoins, they actually sort of dominate a greater part of DeFi, but it's just interesting that there is this very clear distinction and sort of difference between really what sort of the centralized stablecoins and then a decentralized stablecoin like that. And I think even you can see that if you see how the regulators are treating it. And you have recently the Bank of International Settlements basically saying that a decentralized stablecoin like DAI isn't, like, they're not really considering that a stablecoin in their new classification. They actually consider it like a volatile crypto, which is maybe not ideal, but it sort of shows this clear difference between the two approaches.
Thanks. Yeah, totally agree there. Matthew?
Yeah, I think at Terra and Anchor, you know, we kind of feel that stablecoins are our business, right? And so we think stablecoins are really the most important product in crypto, kind of uniquely serving the currency functions of cryptocurrencies. So we think stablecoins are really the dominant use case, and it powers tons of cool things. Like within our ecosystem, you can transact in a seamless fashion. You can earn close to 20% interest via Anchor. You can take loans out with stablecoin UST. In the future, you're going to be able to participate in lotteries, donate to charities, make purchases via debit cards, etc. And so our belief is, you know, if you have a utility generating currency, it's going to be a currency people are clamoring for. UST is an algorithmic stablecoin. It's decentralized, fifth largest overall, with I think market cap's over 2 billion. And that powers really a lot of real life use cases, and it's really the gateway drug, so to speak, to a lot of the things happening in the Terra ecosystem. And like Rune was saying, like I think it's hard to claim to be true DeFi without decentralized stablecoins. With such a core primitive being centralized, you know, how can you claim that there's no single point of failure? It kind of goes against the whole ethos of DeFi, although really love what USDC is doing, and some of these other players. Yeah, we want to see this whole space succeed. We think we're onto something at Terra, but I think they're playing a more and more important role. And again, we think it's the kind of foundation. It may even be the big on-ramp for normal users to access crypto versus going out on the risk curve with some super complex derivative sort of thing. We think stablecoins are the kind of most accessible thing. So we're obviously really bullish on it, despite some regulatory uncertainty.
Definitely. Bob, anything you want to add?
I think from our perspective, our team's a technology team, right? We consist primarily of engineers between our team and MIT. I think the important thing for us is to learn from the engineering that companies, like MakerDao or USDC, Circle Center, Coinbase, for example, what they've seen in the real world, right? Because these are very interesting production scale efforts to try to move value over new types of networks. And if we're going to do this type of research, our research is all applied research and engineering, and we're open sourcing our software. So folks like those in this panel can tear it apart, right, and understand where we did wrong. Because there's going to be a lot of wrong there. Of trying to learning from production efforts of moving value over new types of networks is a really helpful thing for us to understand where are the trade-offs in trying to design a potential hypothetical digital dollar. There's a lot of work left to do because the stakes are so high and the challenge is so deep. But the private sector innovators, like on this panel, that's where we're going to learn some lessons. And so we're very glad to learn from them.
Awesome, yeah. And based on what was just mentioned, I think we could kind of like skip over to this question. What are some of the, I guess, potential upsides and potential either downsides or considerations that come into play when, say, trying to make a stablecoin feasible or usable for, say, retail folks, right? I know that a lot of the times people are worried about, consumer protection, and the idea that, anytime I swipe a card, I should be able to pull my money back, no questions asked. And what are some ways that we can kind of build technological and social solutions to that, but in a more distributed or decentralized way?
So I wanna answer that with a bit of a little bit of sort of not a counterpoint, but that actually I don't think so when we set out to build DAI like 5 years back, right? When initially my big problem was Bitcoin is too volatile. Nobody's going to use it, right? It's fun for speculation, but how are we going to sort of help regular people take advantage of this technology? And the stablecoin is the answer, right? That you provide them with stable value on the blockchain, then they can actually access all of these advantages that the blockchain offers, right? And I think from there, the sort of next logical question is then like, how do we get everyone to adopt this? But what I've actually found is that it's really not, most people, don't really need the advantages of blockchain in the way that sort of people often inside the blockchain space think the approach should be, which is what I call like shoving it down the throat kind of approach to blockchain, right? Where it's like, blockchain is the future, so you have to use it in some shape or form. But in my opinion, the reality is that most people they're never going to care about it, and they're never going to notice it, and it's really going to run on the back end. I mean, one sort of analogy that I like, I think is great, is, if you look at the front end of banking, that was really fintech that revolutionized that, right? So there's already been this sort of front end thing where now you got the bank in your phone, and it's sort of got apps, you got the internet, like it's all, there's already been a revolution in that for quite a while. And DeFi is actually about the same type of revolution, but now on the back end, right? Where now we're going to change everything on the back end, so we make all of that based on the internet and based on sort of modern technology. And so it's definitely the case that when you're revolutionizing the back end, you also get some completely new opportunities for sort of making let's call it a full stack approach, right? We really create this like blockchain native or like internet native banking experience. And I actually think that the places where you really see that explode are places where there's like people are financially underserved, right? So my favorite example of Maker and DAI is DAI adoption in Argentina, where we saw basically that just with the basic infrastructure of like crypto wallet and then the DAI stablecoin actually created a situation where a lot of regular Argentinians in Buenos Aires, they started all adopting DeFi stablecoin and using it to sort of create their own little local economy, essentially. Because to them, this meant an easy way to access digital exposure to US dollars, which is way greater than their own hyperinflating currency. But on the other hand, I mean, I don't expect that you'll have people in my country of Denmark, for instance, using a stable coin or using a crypto wallet anytime soon, because the infrastructure is already there. It works well enough, essentially, right, in most developed countries. And actually, what I found is, like, when people actually spend DAI in Denmark, or so most people I know, when they actually use crypto, they're using it through a credit card anyway, right? Like, so they're using these like crypto-enabled credit cards, which now exist all over the place, or debit cards. You can use DAI, right? You can use Bitcoin. They're actually really great. I would recommend them for people that want to sort of dip their toes in spending crypto, but kind of want it easy. I actually think that's very often how we'll end up seeing crypto adoption. Is like, it's a way to sort of take something that's already there, and maybe like some fintech front end that we're already used to, like whatever, Robinhood even, right? And then just using some blockchain to make it cheaper and better settlement and better security and so on.
Definitely, yeah, I agree. There are a lot of benefits to building something on censorship-resistant tech, but to your point, it doesn't necessarily need to be the case that the entire product is kind of rebuilt from first principles with a lot of those mindsets, because sometimes certain customer segments may not necessarily be attuned to that. So yeah, I definitely agree with you, Rune. Anything the rest of the panel wants to add? Matthew, Bob?
Yeah, I mean, I agree with Rune. I think that the first like real ubiquitous case of crypto usage in the country or the world is going to be through an application that people don't realize it's crypto. They'll just be happening, and it will provide the functionality and the utility that they need, but they won't be aware that they're using cryptocurrency to accomplish it. And I think the biggest challenge when it comes to introducing that kind of technology is that we're untethering the asset from the jurisdiction, and finding a way to have the application function and be able to, like in Rune's case of Argentina, being able to access the stability of a currency in a jurisdiction other than your own, and finding a way to represent that through an application where you don't have to consciously decide, I need to go find crypto in order to gain the benefits of that stability.
Definitely, agreed.
Yeah, and the biggies, the big benefits we've seen are Rune touched on, removing friction, lowering transaction fees, instant settlement. We have a payments app, Chai, which is actually really big in a few countries in Asia, like Mongolia. It launched in, I believe, June 2019, mobile payments app powered by the Terra blockchain. It's got over 3 million users, hundreds of thousands of DAUs. It's in the background. It's doing all this stuff and just really creating a better user experience in the Chai app. Hopefully what you're talking, about payments infrastructure, it's a new set of rails, and it's a more efficient set of rails, and you're abstracting away the nuts and bolts of this stuff so that all end users see is a much better UX. And yeah, that sounds pretty good to me. You got Master and Visa and MasterCard getting serious about the space, and they're talking to all the major players. But yeah, I obviously downside, there's all this uncertainty about regulation. Though it's hard to see right now what concrete rules look like. But yeah, I mean, one of the reasons I joined this company was there were real life things happening, and it wasn't like we were forcing use cases down people's throats. It was more like, hey, there's kind of latent demand for this, and there's people who, especially in some of these underserved places, that really can benefit from this. And so, I pretty much agree with the panel though.
Cool. One question for Bob. Given, Powell's recent comments, how do you think governments might use CBDCs to kind of respond to the growth in stablecoins? And I mean, this topic, this idea has been coming up a lot over the last couple of days, but definitely in the weeks and months. How do you see not just the US, but I guess governments in general, building that sort of CBDC payments rails in relation to like stablecoin, just the stablecoin networks and stablecoins and how they're being used in DeFi and potentially, payments and the pilots that we're seeing with Circle and a number of other stablecoins. Like, how do you see those, I guess, train tracks either intersecting, running in parallel? Is one going to kind of like, are the CBDCs going to, jet out in front of and try to, pull people onto their train? Like, how do you see that playing out?
Yeah, sure. And of course, I missed this the last time around, but my opinions are my own and are not representative of the Federal Reserve Bank of Boston, the Federal Reserve Board, or the Federal Reserve System as a whole. Again, our team deals in technology. There's brilliant women and men who are highly seasoned in these policy questions, so whether the macroeconomic questions, monetary policy questions, the AML, KYC questions. What we think about from a technology standpoint is independent of whether or not a stablecoin exists. When we're building our technology from a research standpoint, one, we're trying to make our platform as flexible as possible, right? So, for example, we always use the airplane metaphor, right? So when create an airplane, you primarily need something that creates thrust, something that can get off the ground safely, and something that can land safely, and then everything else that's on there. The cloth in the seats, the food you serve, the color of the plane itself, those are UI decisions or regulatory decisions, right? So the FAA may state what type of emissions the Boeing may be. They may be different in China, they may be different in India. So we start with there. We think, for example, for a CBDC to be compelling, it needs to be fast, right? So that it needs to be fast at scale. So we're thinking at least as fast as the card networks, and at least handle the amount of Americans that want to use it, if not global persons, right? So what does that look like? That looks like tens of thousands of transactions a second, managing at least 300 million people, and flexible enough to either be 300 million personal wallets or 300 million people running through the existing intermediary system, right? It needs to be highly secure. It's going to be, were it to be launched, the single most hacked piece of software in the world, arguably. And that needs to be resilient, right? So an earthquake in Northern Virginia can't shut the network off in California. So those are the kind of things we think about. I think stablecoin operators have a little different use case, and they have a little different stakeholders to worry about. One thing I think about is how do we, when we think about design later on, how do we, one, make our core processing engine flexible enough that policymakers are permitted to make their decisions based upon what they know, right? So I don't know these economic questions because I don't have the smarts for it, frankly. And I'm not in Congress, so I can't either keep AML laws the same or modify them to handle this new technology. It's not my decision. What we're trying to do is build something that's highly flexible that these people can make their decisions. But I think one thing that we're learning from this conversation is that there are certain user interfaces and ways people like to use these products that are probably going to ring a lot the same. Even if you look at China's build of their CBDC, it looks a lot like Alipay and WeChat, because when people dig into their phone and want to use something, they're used to that kind of UI. So I don't, again, whether or not there's a regulatory thing going on between stablecoins and CBDC, that's someone else's conversation. I think from our perspective, it's learning, right? Learning why people like to use them and how they like to use them, and what does the interface look like? What does the UI look like? And I think to some of these other panelists, do they care what's on the back end, for the front end to work? There are parts of there, but there are key differentiators that I think are natural, right? So we define a CBDC as a
Did we lose Bob?
Looks like it.
Yeah, there seems to be a little bit of lag. Can the rest of you guys hear me?
Yeah.
Okay. Well, that is a bit inconvenient, but I can get to answer some of at least one of the questions from the audience, because we have time for about one question. And this is kind of related to kind of like regulation and stuff like that, but Ron Ho would like to hear about MakerDao and Terra's approach and strategy to regulation, given that these are two decentralized stablecoins, and on a high level, if you two could speak to the sorts of conversations that you've had with regulators.
Yeah, I can certainly talk a little bit about that. So in Maker, Maker really actually started off with the idea of creating this like the pure decentralized stablecoin that really had sort of no connection whatsoever to the real world. And then after a while, we found out that it's not really possible to keep a peg to the US dollar without also having some kind of economic exposure to assets that are themselves sort of exposed to the US economy because of basically how currencies work in a sense, right? And because of how interest rates work. And so we found out that the solution is real world assets, as we call it, and sort of real world integration, where you actually need to be able to have DeFi protocols interact with like legal systems and things like recourse and enforcement of collateral rights and all of these sort of complicated real world things that, a bunch of crypto developers, at the time it was kind of a big hurdle to consider. But we basically just been working on that for many years. And one of the first things we sort of realized is if you're going to be engaging with the real world, then of course you need to like engage with the regulators, and you need to really sort of understand that they, you need to, I guess, play by their rules, right? If you're gonna be doing any sort of activity in their jurisdictions, you have to, follow the law, obviously. But also, we thought that it's very important to be out there educating the regulators ourselves, right? So there are people from crypto that are out there, talking to the different institutions and the politicians, and really, making sure that we provide a sort of a good first experience almost, right? So it's not just something you read about in some news story about a crash or something, right? But instead you have people that are actually working and building things that make sense and provide value to real people out there advocating for technology. Yeah, we've been doing that for many years, pretty much over the whole world. Like we've been speaking to regulators from all the top jurisdictions, and most of the big agencies and sort of the really big jurisdictions. And I think it's been worth it. But of course, it's also it's definitely an ongoing task, right? Because there's just so much sort of such a huge gap in sort of how we view these things, right? And fundamental questions around like what is decentralization even, right? But I actually think it's kind of it is a really exciting topic to see how it all shapes up, because it's going to be all about how do we reconcile the reality of code is law on the blockchain, and then the regulated financial activity and the incredible assets and wealth and the economy that exists in the world, right? And how can we combine these two, the advantages of blockchain technology with all of those assets, and the jurisdictions that manage to unlock this are going to reap massive first mover rewards, I believe.
Yeah, I agree. There's this notion that everyone in DeFi or stablecoin is some libertarian like deviant who wants to evade taxes or play by a different set of rules or no rules at all. I can assure you the people who want to stay in business and create societal good aren't thinking that way. So I kind of wholeheartedly embrace smart regulation and compliance because it makes the industry safer for users, expands the pie for companies working in it selfishly, right? So if I skirt laws or don't meet compliance requirements, my traditional finance partners can't do business with me. So if you want to look at incentives, that's a good place to look, right? You don't have to just listen to me. And in terms of what we're doing, we're joining associations and trade groups. I'm going to DC twice next month to engage with regulators, kind of asking for clarity. And I love that governments and central banks are seeing the advantages of a digital currency, and I have confidence that they're going to work with the industry to understand all the implications of what they're doing. I've got friends in DC and New York who want to take a really reasoned approach here. These are not like some heavy-handed authoritarian type people. They're very smart and curious, and they want the U.S. to up its game. And so, I'm confident that, with some education, with reach out, with this notion that, we need to play by a set of rules. And as long as those rules are, kind of crafted with us, with input, obviously governments can do what they want, but if they take the approach that, hey, we want to learn about this and understand the upsides and how it benefits citizens, we're all for it. We're all for it. It really validates a lot of the stuff that's going on in the industry, and it elevates good actors, like Rune was saying. And if some bad actors get removed from the business or worse, that's kind of on them. But we are all about compliance and working toward that.
Thank you, Matt. Thank you, Kiki, and all the panelists for speaking.